There are 6 golden steps to financial freedom for women, and today we are going to see those 6 golden steps. Hello, I am Nilesh Bodhi and we are watching Motivated Life Coach. The first step is personal financial health. The second is educating on investment. The third is the magic of budgeting. The fourth is planning the unplanned. The fifth is relying on professionals, and the sixth one is money matters at dinner. Take responsibility of your personal financial health just as you watch what you eat or exercise to keep healthy and fit. Think of financial health as an imperative. Money is a tool that helps you secure your future and gives you the flexibility to better your present. Hence, it is wise to put financial health high on your list of priorities right along with your physical and emotional, and learn the basics of money management exclusive of that of the family. The second golden step is educating on investments. That is, educating yourself as much as you can on different types of investment. Don't rely on the menfolk in your family, be it your father, brother or husband, to take care of your financial well-being. It is smart investing that will help your hard-earned money work harder for you. Educate yourself about investing and management. Let us see some investment options. The first one is direct equity. That means you are directly investing into the share market. Obviously, it is market linked. Second one is mutual funds. It is again market links, and if you are working for a big corporate, you can invest in ELSS, which have a lock-in period of 3 years and it comes with a tax benefit. The third is national pension system. It is specifically targeted for retirement, means investor who is looking for retirement plans. It is again market link and it could earn you between 8 to 10%. The fourth one is public provident fund, that is PPF. It is for a minimum period of 15 years and it can yield you a return of 7.10% as per the current market conditions. Then we have fixed deposits. Now, if you see the fixed deposits, the corporate companies basically offer you very good returns. For example, Sriram Transport Finance. If you do FD over there, you could earn an interest of 7.25% to 8.09% for 12 to 60 months. Okay. Then we have real estate. Now, real estate, it's very dicey. If it is at a prime location, then you will get very good returns. But if it's not a prime location, you may not get good return. So you will have to think a lot before buying into real estate. But it can be a good investment option, as I said. If it's a prime property, no doubt about it. The next is gold ETF. So gold ETF is just like a stock market. The way in which you buy stocks, you can buy gold ETF from the stock market. So you can go to any site like Zerodha, Angel One, Grow, and you can buy it from there. I personally prefer Grow because I like the UI so much. The next one is RBI bonds, wherein the minimum period is 7 years and you can expect a return of 7.15% as per the current market situation. The next one is Pradhan Mantri Vaya Vandana Yojana. This is basically for senior citizens wherein you are retired, or let's say you got money from some other sources and you want to have a fixed amount, a monthly income. So you can put this money over there for a period of 10 years and currently the return given is 7.4 to 7.6% for 10 years. Once the 10 years period is over, you will get the investment back. Next is unit link insurance plan. So this is for an investor who is keen on wealth creation and at the same time he is expecting life cover. So it is depending on the investor profile, and after studying the different unit link insurance plans, you can go for it. Okay, based on your needs and your risk profile. The next one is post office monthly income scheme, wherein you can put the money for 5 years. It doesn't have any risk and the returns expected is 6.6% as per the current market situation. And then we have IPO, that is initial public offering. When a company lists itself into the share market, it is done via launching an IPO. I got the Supriya Life Sciences IPO for a price of 127, and today it is running at 486. So you can see when you get a good company in IPO, you can expect a return more than 50%. Next is Sukanya Samruddhi Yojana, where the minimum period is 15 years. The eligibility is less than 10 years. This is only for girls. There is no risk involved and the current return is 7.60%. Next one is Kisan Vikas Patra. It is for a period of 124 months. Eligibility, any Indian citizen can take this. Low risk and the current returns given by the government is 7.15%. And the last one is National Savings Certificate, which is 5 years period. Any Indian citizen can take it risk free, and the current returns given by government is 6.8%. There are other instruments as well on which you can study and gain the knowledge. These are just some of the instruments which I have tried to cover. Whatever you do in your life, if you do without budgeting, it has no relevance, as you will never be able to track the performance unless it is budgeted. So budgeting is the key. Most of us do not do budgeting, and hence we don't know if we are in profit, loss, or in the balance state. There are three types of budget: balance, surplus, and deficit. So in a balanced budget, your income equals to the expenditure, means whatever you earn, you are spending on it. There is no profit, no loss. In a surplus budget, your income is greater than the expenditure. That means you earn profits, and this is a very good kind of budget, because then once you earn profit, you can put it into a lot of instruments for your future. The third type is deficit budget, wherein your income is less than the expenditure. Okay, so budgeting is the key for everything. You can use the 50-30-20 rule to help you budget. Now the 50-30 rule puts 50% of your income towards necessities like housing and bills. 20% should then go towards your financial goals like paying off debt or saving for retirement. Finally, the 30% of your income can be allocated to the wants like dining or retirement. You can also use one of the many budgeting apps available online to get a better control of your spends. So what are the benefits of budgeting? First, it puts you in control of your money. Second, you become aware of your spending habits. Third, it helps you set priorities. Fourth, it lets you prioritize savings and investing. Fifth, it ensures you get control of debt or avoid future bad debt. Sixth, it helps you prepare for unexpected emergencies in your life. Seventh, budgeting helps your family talk about money. Eighth, it can decrease future financial stress. Ninth, it increases your financial literacy. And 10, it enables you to track financial goals. Plan for the unplanned. If there is anything you can be certain of in life, it is the uncertainty of the life itself. You don't want to be caught in a situation where you are at a loss if your cash flows come to a sudden halt. So always build an emergency fund that can take care of your expenses for at least 6 to 12 months in case of loss of job, an accident, or an health emergency. In the risk and uncertainty continuum, we have three things. First is the risk, where the probabilities and outcome are known to us. Then risk and uncertainty, where we have some knowledge of the probabilities and the outcomes related to it. And the third part, which is uncertainty, the probabilities and outcomes are unknown. Now, Eckhart Tolle has given one quote where he says, when you become comfortable with uncertainty, infinite possibilities open up in your life. It means fear is no longer a dominant factor in what you do and no longer prevents you from taking action to initiate change. The Roman philosopher Tacitus rightly observed that the desire for safety stands against every great and noble enterprise. If uncertainty is unacceptable to you, it turns into fear. If it's perfectly acceptable, it turns into aliveness, alertness, and creativity. So, become comfortable with uncertainty. So, infinite possibilities will open to you in your life. The fifth golden step is relying on professionals. The most important thing in life is decision making, and sometimes people are very hesitant to take any decision, be it big or small. Rely on professional money managers, invest in mutual funds. If you are a beginner and do not have the time or the requisite knowledge about investments, do not be adventurous with your investment from the very beginning. Once you are familiar with the basics of investing, consider mutual funds route to meet your financial goals at various stages in your life. Mutual funds are managed by professional market experts who manage your money on your behalf and attempt to meet your investment objectives according to the mandate of the funds you have chosen. Further, they provide you the option of investing in small amounts via systematic investment plan or SIPs that do not burn a hole in your pocket and yet help you achieve every financial goal at different life stages. Remember, mutual funds are subject to market risk, so please read all documents carefully before investing. Now, decision making, it is an act of choosing one alternative from among the set of alternatives, or it is a choice that is made about things that affects a person's life. So there are two types of decision: a routine decision and a major decision which could change your life. For example, the major decision of your life could be buying a house. So it is going to change everything. You need a solid planning to achieve it, right? So there is a 4-step decision process if you want to consider. I am just presenting it to you. First is what you have to define what is the situation, what is the issue or the problem. Once you know that, second, what could be the possibilities? I mean, how could you do it basically? Means how could you work on the situation or the problem or the issue? Third, how should we choose the criteria that this particular problem can resolve by this particular thing? Okay. And the fourth is acting. That is what will do what. So once you have decided, then your outcome will depend on the things which you have decided. So decision making is a continuous process wherein we will do the assessment, you will do the planning, you will do the implementation, and you will continuously monitor and evaluate till the time you achieve your goals. So when you are at a stage in your life where you are totally new, you don't know anything, it is always best to rely on professional. The professional can be anyone, but always take the help of professional. In case of mutual funds, go to mutual fund distributors or your financial planners. They'll help you, right? So rely on professional. This is the fifth golden rule for investing. Make money matters a part of your family dinner table conversations. Like with everything in life, talking about your things make things easier. Do not shy away from talking about money with your spouse and even your children. It's a good idea to make money matters a part of your family dinner table conversation so that all the members of the family are involved and can do their bit to meet financial goals as a family. This will take away the pressure and make it easier to manage money without getting stressed about it. Okay, chances are when you put your head together and work collectively, you can meet all your financial goals comfortably. Hence, start discussing money matters at dinner and you will see you will meet your goals comfortably. Now that we have learned women's 6 golden steps to financial freedom, I would like to share how to set smart goals in life to achieve your dreams. Just give it a go and see how it works for you. So, setting smart goals. First is specific. Okay, specific means your goal should be as specific as possible and you should be able to answer the questions. What is your goal? How often or how much? Where will it take place? M is measurable. How will you measure your goal? Measure will give you specific feedback and hold you accountable. A is attainable or action based. Means goals should push you, but it is important that they are achievable. Are your goals attainable or achievable? R is realistic. Is your goal and time frame realistic for the goal you have established? And last one is T, that is time bound. Do you have a time frame listed in your SMART goal? This helps you be accountable and helps in motivation. If there is no time bound, it doesn't make any sense and you're not going to achieve anything. So this is nothing but setting SMART goals, SMART, and every letter has its significance. I hope you like this video and you will go and start setting your SMART goals in your life. Thanks for watching. If you wish to invest in mutual funds, get life coaching, mentorship, or have any other queries or concerns, then please fill in your data by clicking on the below link. You can also email us at bodhifacilities@gmail.com or contact us on 7349701701. Please don't forget to like, comment, share, and subscribe to our YouTube channel. See you in the next video. Till then, take care.